folks, so we have to have a talk. Too many of you are doom and gloomers. I see it in that wonderful comment section, but nobody will rebuttal me on your doom and gloom outlook and why you think the markets may continue to go down, because I've arguably stated, especially over this week, that we could potentially be finally seeing the bottom in the market. And I will always be an optimist, because over the long term, at least since the stock market was incepted over a 20-year period, if you haven't been optimistic, you've generally been losing. And as I do here every week since the start of my YouTube channel back in 2018, I'm going to give you full clerical insight into my over $365,000 dividend stock portfolio as we look through each one of my individual brokerage accounts, and then finally take a broad view perspective from the spreadsheet that brings it all into view. So hit that like button, folks. And first and foremost, a lot of people getting very overzealous this week, and it's been nice to see a full week of basically green. I mean, the NASDAQ here, guys, since the lows of the week jumped up 8 to 10%. I don't want to get too hopeful, but if we get a couple weeks like this, all the shorts will be forced to cover, and we could see a true bottoming of the market, unless this is another fake out bear rally where it kind of goes up 10 to 15%, followed by another calamity. But take a look, the S&P 500 following suit here, guys, up 6-7% this week. On the Canadian side of the border, the TSX also up about 5-6% this week. The Chinese market's doing very well. So this has all been muy bien. Beautiful way to start the long weekend in the US. I'm sure many people sleeping a lot happier this evening, and I hope you've been taking my advice, which is continue to cost average and do not stop buying the markets here, guys, because that's how you're going to win on these weeks where the market recovers if we don't see those lows again. Right now, let's talk about the watch list before we dive into the accounts, because we recently found out that Ray Dalio bought GameStop, he bought AMC, and I don't know when he picked them up, but looking at the rebound this week on these guys, I mean, it's up 7% today alone. He could be up on that position depending on when he bought it. But the only thing really getting hit this weekend, guys, is crypto. I mean, Bitcoin continues to trade down against the market, but everything at the top of this watch list is in my portfolio. And outside of Northland Power and Algonquin Power Utility Corp, I'm doing very, very well from the full perspective here, folks. And as we look at the more speculative side of my watch list, like Tesla's up 8% alone today, Shopify up 5%. The more speculative we get when we're talking about, say, the ARK ETFs, I mean, the ARK Innovation ETF up 7%, ARK G up 6%. I mean, it's just, This doesn't feel good, though, if you've been shorting the market or you haven't been buying the dips. That's all I know. But let's get into each one of my brokerage accounts, starting with my TFSA. Now, many of you on the Canadian side of the border know what I'm talking about here, because this is where I make tax-free income in perpetuity for the rest of my life, whether it's dividends or cap gains. And taking a look from the Canadian perspective, guys, everything's done very, very well for me here. Outside of the recent purchase of RioCan, things are great. I mean, this account's doing very well with the banks recovering after earnings, getting some green out of those guys. And on the US side, since a few weeks ago when I decided to convert all my stocks to index funds, from the US perspective, guys, VYM, this is one of my biggest plays this year. I've been kind of in and out of it, but I kept stating literally since the beginning of the year that VYM, this dividend ETF, will outperform the market, because most people are going to the flood to safety. This holds heavyweights a lot of the oil stocks. I mean, Procter & Gamble, Pepsi, all those kind of conglomerates, Johnson & Johnson, obviously. So this one is actually green for me in my portfolio now, and whereas VOO is just starting to recover since I bought it, I'm only down 1.2%. This is my biggest VOO position, about $46,000 US. Now, taking a look at the RRSP, again, converted everything in here. This is where I held Pfizer, J&J, Pepsi, those really foundational dividend stocks. Put most of that into a VYM, guys, which we're now up 2.84% on, almost $1,000 on VYM since I bought it. Beautiful stuff. Now look at VOO, I'm down less than 1%, and this is my smaller VOO position, but we'll see more of these same positions in my corporate account. Now, talking about my managed account, I got a little bit of dividends in here, a little bit of dividends in all of these accounts, not enough to make a substantial purchase, but nonetheless, everything outside of Smart Centers in here, again, doing very well since I've been purchasing these stocks. Haven't seen any red outside of Smart Centers, but again, keep in perspective, I held these for a long time. I was almost up over 50% on RioCan since it's kind of capitulated a little bit with the real estate sell-off, but that's the managed account. So finally, the corporate account, where I have been just dealing with some nightmares here, guys. There is a lot of pros and cons to starting a corporation. You get some tax benefits, but you got to deal with the headache of a CPA. And my current accountant has been not doing his job, so I had to go find a new accountant, and these new guys are hustling for me, but I'm expecting a couple $1,000 bill for the work that I had to give to them, because when you're making global income off an industry that didn't exist up till a few years ago, there are a lot of questions come into play, but they're hustling. I'm very excited to get that done, because I'm sitting on $2,000 in cash in here, another 270 US, and this doesn't include the other 40 $70,000 I have in cash amongst my corporate account and my regular account. I just don't want to do anything until I'm very clear on how much the government is going to want. But this account, my corporation, guys, is currently worth about $87,365, still up on a 12-month basis, but down about 1.44% basically since I've been buying and shifting these stocks around. Now, from the Canadian perspective, I am green now on Enbridge. Stated this before, guys, the trend remains your friend. Oil stocks, I bought them at all-time highs. Still going up to all-time highs. Well, I wouldn't say all-time highs. Enbridge is recently rebounding to new highs, just like Exxon and all the oil companies. But nonetheless, taking a look, BCE, Royal Bank, Algonquin Power, I am down slightly, but not enough to make a significant difference, in my opinion. And overall, on the Canadian side, down 1.81%. Now, I did very well on the U.S. side of this account because you might remember I held Tesla. A lot of gains I took off there. Wrote some of those gains off by selling my Facebook position. I sold Google pretty much for a flat rate. I don't know if
Sorry, could you say that again?
Shut up. Been really debating on buying Google back, to be honest. Google is trading at what seems to be a relative discount for what I think is going to be the future of the conglomerate that is that social media company, getting into self-driving and all those other facets. I love Google. It's like a really stabilized ETF, which I really love. But taking a look, since I converted all of this to VYM and VOO, guys, I am actually red on both these positions, but again, nothing substantially enough to like really impact me in a way where I'd be like overly concerned. But again, since I've been shuffling the stocks around, guys, the overall portfolio hit a high of 390,000, whereas today we're sitting at that 365. Overall, the entire percentage that I am down sits now around 6%, I believe, last time I calculated. But let's get into the spreadsheet and the broader view. A good time to remind you guys that this video is brought to you by thechartmaster.com, a website we own and run where you can get access to all of our spreadsheets. You buy one, you get the rest for free, everything from iCloud to Google to Excel. A lot of these are automated, automate your dividends, or it's just general, really good for somebody that looks to track their financials, right? So moving into the spreadsheet, this isn't nearly as clean as the spreadsheets you guys will be getting. I've really refined this to a simplicity, or just some simplistic overview, just to make things more clerical, because I'm dealing with multiple currency conversions. And keep in mind, all of this is in CAD as always, guys. But VOO and VYM right now are the two largest positions in the portfolio. I am looking to scale VOO to get it to around 30% of the entire portfolio, and I want to try, well, maybe a little more than that by the time I'm finished. But ideally, I would like VOO's dividends to make up at least 20% of the entire pie income from the dividend income perspective, because right now most of my income is coming from the Canadian side of the border. No surprise, we're getting dividend increases across the board this earnings season, especially from the banks to the telecoms. It's been really good from a dividend standpoint, so I will have to recalculate my dividend income, because likely after this quarter it will have increased slightly. But overall, guys, making $12,120 annually, $1,000 a month. Absolutely beautiful stuff here. And I've also still got some private placements I can't really talk about. Really excited to see that company come public this year, to see how that works out. But there you have it, folks. Since 2018, when I started this channel with merely $100,000, watching the portfolio return to 100K in the March 2020 crash to where we sit today at 365,000 has been a wicked journey. And I really appreciate every single one of you taking these steps with me as we kind of learn this together moving forward. Now, I've been helping my parents move into their retirement, so I'm sorry that the content's been a little dodgy lately because I've been in and out, so much internet problems. I'm going to be moving out myself in a few months here down to the city, so I'm trying to refine my portfolio to a manner where there's a lot less management involved and a lot less stocks. So like I said, guys, it's going to be really fascinating, because I am looking at some of these large cap tech companies always, whether it's Google, Tesla, Nvidia, and just trying to figure out if I do want to start cost averaging back into them down here, or if I would rather just weight them through the ETFs. I'm going to ask that opinion onto you. I'd love to know what you guys are doing. How have you reframed your mindset in this new market cycle? And I'm going to state it one more time. I will always be more optimistic than I am negative. And at this point in time, guys, if you are not buying these dips, when the market does rally, you're going to miss the real returns that are going to happen. Place your bets where you so choose and figure out what your risk tolerance is. I'd love to hear about all of it in the comment section. So stay cool, stay awesome. And as always, I look forward to catching you in the next one.